Hi guys, Piotr here. This is Liteforex Global YouTube channel, still weekend. All the best at the very beginning 2021. We are going to go through euro dollar, we are going to go through oil and gold charts. So this is a preview of the possible weekly trading setups when it comes to the euro and the dollar. It's gonna be very interesting. Worldwide, Monday and Wednesday, that's gonna be the PMI day. Monday is gonna be the manufacturing, Wednesday is gonna be non-manufacturing or services, if you wish. Tuesday and Thursday in US it's gonna be ISM, manufacturing and non-manufacturing, and Friday, of course, the big non-farm payrolls day. So euro dollar, to be honest with you, well, when it comes to the bulls, I did expect a little bit more towards the end of the year. Is the upper shadow, the yearly charts are going to play the main role? Well, we will see. Anyway, oil. On Monday we have quite important, and hopefully I'm not gonna to miss much, JM, MC and OPEC meeting. So it's worth to watch very carefully what is going on with the oil prices. Finally, gold still below 2000. The question is if the new stimulus checks in US, and well, some of that money are gonna to be used to fund the let's say Robin Hood accounts, right? Well, is it possible the Robin Hood traders are going to push the gold above 2000 and we are going to see another rally? That's gonna be very interesting to watch the gold price action. As long as we are below 2000, 1950, I would say, well, you know what's my point of view. Now, if you don't mind, please leave your comments in the section below. Without the further delay, guys, let's jump straight and see you inside. Euro is trying to hold above the weekly open. It's a week with the focus on the worldwide PMIs, as well as the cherry on top of the cake on Friday, non-farm payrolls. So that's gonna be very interesting. Well, still also above the last FOMC low. So we were discussing that as long as we are holding above levels towards 25 could be in play. So from the weekly chart perspective, I was quite surprised to see the last trading day and building the upper shadow on the weekly, closing below some very important levels. Some kind of the swing high creation could be in place. A little bit of the pullback, we will see. But support demand around the weekly open, number one, and then 50% of the breakout candle, right? Levels close to 2180. That's how the things looks like from the weekly chart perspective. Let's switch to the daily chart. There you go. This is the strong rejection we've seen over the course of the last trading day. But if you see what happened here, it was almost, we stopped at 50% of that candle, right? Almost. Anyway, market is trying to go higher. I would eventually trying to be patient, trying not to chase some prices from the daily chart perspective. I would eventually I would wait for some kind of the measured move. In that case, I wouldn't be surprised and make like this. So in case of deeper pullback, as you can see, there is a possibility market may look for some stops again to try to test these levels related to the FOMC. On the other hand, I wouldn't be surprised to see the sellers around the current level to try to build the swing high based on the weekly chart. So in that case, I think buyers below 122, sellers could be around the current level higher towards 2315, and then there is one more level higher, 2360, with the possible supply when it comes to the euro dollar intraday chart. Market right now is testing supply from that last trading day of 2020 right here. Curious if we are going to see some kind of the stop count and rejection, all right, or if we are going to go through that level. If we are going to go through that level, if we are going to break on this intraday chart 2290, right, so we might see this level as a latest level of the weakness, breakout, retest of that 2280 in that case, and continuation higher, and the target would be at the distance we've seen on the last trading day, this time to the upside. So that would be more or less 70 from 20 to 90 is gonna give us 2360 I mentioned second ago. So that's the euro dollar. The next one is the oil. Crude started very strong the week. Looks like from the weekly chart perspective, market is going to target the level a little bit above 50. We discussed this previously, so that's where I do expect some kind of the supply on the market. The question is if it's going to be enough. The second possible target is the midpoint of that broken to the downside consolidation. In that case, we are talking about the levels towards 58. So 50 plus and 58 as the upside targets. Now that's a little bit of the consolidation. In case of the pullback from that level, I think that 42 from the weekly chart as a demand, so the breakout point number one. But still, something I've been targeting some time ago, of course, didn't materialize with the false break over here. But this latest weakness over here hasn't been tested. So at some point in the future, if we are going to give up 35, then 29 could be in place. So to the upside 50 plus and 58, to the downside 42, 35 and 29 from the weekly chart perspective. Let's have a look what we have on a daily chart. And on a daily chart, that's the strong move to the upside. Well, plenty of small supply zones, different colors means different time frames. Green daily, just a reminder, blue weekly. So that's the level of the supply we discussed a second ago from the weekly chart perspective. If we are going to see some kind of the rejection, the market may want to look for some stops under 45, and that would open 42 as discussed a second ago. And finally, gold. There you go. Very interesting thing here. Strong start, but still below 2000. But I would like to show you one thing. That's the January. That's the December. January, December, January, December, January, December. All right. January, this time December was to the downside. So just think about that for a while. So no in rush here, but while below 2000, looking for some kind of the selling opportunity. Why? Because that was the February, March, April, February, March. That was upper February, March. And so on and so on. Do your own homework, but that looks you know, we have at least something to play with. Now the crucial here is from the monthly 1780, that's the weakness right over there, but I think much more important weakness is that one here, and we are talking about the levels close to 1610. If you do remember our previous meetings, I've been mentioning that, well, looking for selling the rallies with 1650, 16 as a target, and it's very well visible here from the monthly chart perspectives. Plenty of things, as I mentioned, to look for. Of course, the stimulus checks in US may do the job as well. So from the macroeconomic perspective, worldwide PMIs over the course of the week, and cherry on top of the cake, I'm talking about the payrolls on Friday. With that being said, don't be trapped, guys, and see you around. Take care and goodbye.